U.S. stock futures were little changed on Tuesday as investors remain cautious ahead of the Federal Reserve's policymaking meeting, which begins today. Good morning, I'm Joe Doe. The U.S. dollar index is gaining Tuesday morning as the Federal Open Market Committee meets to convene for its two-day meeting. During the meeting, the central bankers will assess the latest economic data, including a very tight focus on the U.S. labor market. Various economists and fixed income analysts have told me that they don't expect the Fed to announce a pullback to its current economic stimulus program. Consensus is leaning toward a Fed move in March, but other economists have said the bank could take action before then. Apple's gross margins were in focus Monday afternoon after the maker of the iPhone's earnings statement showed an estimate of first quarter gross profit margins that were less than Wall Street's expectations. But during the earnings call, Chief Financial Officer Peter Oppenheimer stated that newly announced free copies of its Mac operating system could create a $900 million sequential increase in deferred net revenue. Here to talk about Apple and those earnings is Nicole Urken. Nicole, what can you tell us about the profit margins for Apple?
Yeah, hi, Joe. It's very important that you bring that up. Apple largely trades on gross margin. That's been a big concern for investors. So when the release came out and they guided for flat year-over-year gross margin guidance, investors were disappointed. Like you mentioned on the call, they said if it hadn't been for this change in deferred revenue practices, gross margin would have actually been 38.5%. So that's actually better on a sequential basis and in line with what estimates were. That's really important for Apple. So yeah, the other issue is, are the products evolutionary versus revolutionary? This is something we've seen people have been disappointed about, but ultimately we're seeing a strong product cycle. People are excited about events in 2014, potential dividend increase or increased share buyback, which Icon certainly wants. So that's something that we'll be looking for next year. But you know, this was a solid quarter. The gross margin concerns weren't what people thought they were once we got on the call. And this product cycle story is something that we'll have to keep checking back in for next year when we hear even more news on how they're doing and also the capital allocation side of the story.
All right, Nicole. Well, if we're looking on any other earnings, we also saw that Pfizer came out this morning.
Yeah, we talked yesterday that Merck was disappointing. Pfizer is much better positioned. Their quarter beat estimates. Their oncology drugs are shining. Here's a name that has really continued to outperform and is much better positioned than a Merck. Also in other news, we had BP out. This is up on increased asset sales, a big dividend hike. This is a name, of course, that's in a much better position than during the Macondo days not too long ago. A real quarter of strength, and we'll be looking into that later this morning as well.
All right, Nicole, as always, thanks so much. That's what's happening in the morning of October 29th for The Street. I'm Joe Doe.